All right, welcome to this explainer. Let's jump right in, because today we're tackling what is hands down the most common and honestly the most paralyzing dilemma for anyone stepping into the financial markets. We're going to unpack this by looking at a genuinely brilliant travel analogy that will completely shift how you think about participating in the market. So if you've ever felt totally overwhelmed by the sheer number of ways you can trade or invest, you are in exactly the right place.
We see it all the time, right? So many beginners just freeze up right at the starting line, constantly agonizing, should I be a day trader? Is swing trading the actual secret to wealth? Or should I just stick to being a long-term investor? It's a heavy question, and it creates a ton of unnecessary anxiety. People literally spend months, sometimes years, bouncing from one style to the next, desperately searching for the ultimate, objectively best way to trade. But here's the secret. They're asking the wrong question entirely.
To understand why, you have to realize that asking which trading style is best is exactly like asking if a bicycle is better than an airplane. I mean, it sounds ridiculous when you frame it like that, doesn't it? Because the answer completely depends on where you're actually trying to go. You wouldn't take a bicycle across the Atlantic, and you sure wouldn't charter a 747 to go grab milk from the corner store. Every mode of transport is engineered for a very specific purpose. And you know what? Trading works exactly the same way.
So here's our itinerary for today's explainer. 1. The long-haul journeys. 2. The middle-distance trips. 3. Daily and local commutes. 4. Comparing your options. And finally, 5. Choosing your vehicle.
Okay, Section 1. The long-haul journeys, covering investing and positional trading. Let's start with the absolute longest trips, where you aren't sweating the local speed bumps because your destination is miles and miles away.
First up is investing. Think of this as booking an international flight. When you're cruising at 35,000 feet, you literally couldn't care less about the traffic lights down below. In the markets, this translates to looking at weekly or even monthly charts. You're completely ignoring daily market noise to focus on building long-term, compounding wealth. Your holding period here isn't measured in days, it's measured in years or even decades. You're buying quality businesses and just letting time do the heavy lifting.
So, who should actually be booking this flight? Well, since it requires a very low time commitment, this approach is the absolute perfect vehicle if you're a busy professional, a business owner, or someone heavily focused on retirement planning. If you simply don't have the hours to stare at screens every single day, but you still want your money to grow exponentially over time, investing is your long-haul flight to financial security.
Now, zooming in just a little bit, we have positional trading. This is like taking an interstate train ride or a cozy overnight bus. You aren't crossing oceans, but you're still covering some serious ground. Positional traders hold their positions for several weeks to several months. Instead of decades, they're using daily and weekly charts to ride these medium-term, substantial market trends.
The really great thing about positional trading is that it requires a low to moderate time commitment. It's an ideal setup for those of you with full-time jobs who want to actively capture larger market trends. Maybe you're seeking slightly higher returns than passive investing, but you just can't monitor the markets continuously during the workday. You check in maybe once a day or once a week, tweak your stops, and just let the train keep rolling. No stressing over every single tick.
Moving on to Section 2, the middle distance trips, which brings us to swing trading. Let's look at journeys that are a bit closer to home, like traveling to a neighboring city. Picture taking a regional train or an inner-city bus. With swing trading, you're trying to profit from short to medium-term price swings. You aren't strapping in for a year-long ride. You're jumping on a momentum wave that might last anywhere from a few days to a few weeks. Swing traders typically use 4-hour and daily charts to time their entries and exits, hunting for those noticeable swings in market sentiment.
The real kicker here? The time commitment. Swing trading only demands about 30 to 60 minutes a day. You get all the thrill of active trading without the total exhaustion of staring at a monitor until your eyes cross. It's a wonderfully practical middle ground. It's fantastic for beginners who are just learning to read price action, as well as part-time traders.
All right, Section 3, daily and local commutes. Intraday trading and scalping. Next up, we're looking at the styles that require you to be gripping the steering wheel right in the driver's seat.
Welcome to intraday trading, better known as day trading. This is the exact equivalent of your daily office commute. You leave home in the morning, you come back in the evening. In the market, this means every single position you open is closed out before the closing bell rings. You carry zero overnight risk. Intraday traders usually look at 5, 15, or 30-minute charts, and their main goal is pulling regular, daily income from the day's inherent volatility.
But quick reality check, the commitment here is massive.
Intraday trading requires hours of intense, unbroken focus during live market hours. It is, for all intents and purposes, a full-time job. It's built for highly disciplined individuals who have the mental bandwidth to actively watch the markets tick by tick. If you have a demanding 9-to-5 job, trying to use this vehicle is a guaranteed recipe for a crash.
And finally, the shortest trip of all, scalping. Think of this as hopping on a bicycle or a scooter to dart down to the corner shop. You are rapidly weaving in and out of traffic. Scalping aims to capture incredibly small price movements on 1-minute or even 3-minute charts. A trade might last just a few minutes or literally just seconds. The goal isn't one massive home run, it's accumulating dozens of tiny, frequent profits throughout the session.
Listen, the time and energy commitment for scalping is off the charts. It requires exceptional psychological discipline, lightning-fast reflexes, and some serious market experience. You are reacting to pure order flow and micro-volatility. It is intense, it's fast-paced, and it's definitely not the ride for you if you're prone to stress, second-guessing, or, drinking way too much coffee.
Section 4. Comparing your options and finding your fit. Now that we've mapped out all the major routes, let's put these travel options side by side.
When we lay everything out, a really clear pattern emerges. Notice how as the travel destination gets closer, your holding period gets shorter, and the mode of transport completely shifts. If you want long-term wealth, you take the flight with investing. If you want daily income, you take the car with intraday trading. It perfectly captures how your desired holding period and your ultimate financial goal dictate exactly which trading vehicle you have to use.
And finally, Section 5, choosing your vehicle and your next steps. The market has so many different roads to success, so the final step in this explainer is matching your personal profile to the right ride.
The absolute most crucial point is this: you cannot force a fit. You really can't force a square peg into a round hole here. You shouldn't try to trade like a scalper if your overarching goal is long-term retirement wealth, and you shouldn't be a passive investor if you need immediate monthly income to pay rent. You have to choose a style based on your unique situation. How much time do you realistically have? What's your capital, your experience, and honestly, what is your personality? Are you incredibly patient, or do you thrive on high-speed action?
There's this fantastic quote from the source material that sums it up perfectly. Successful traders don't copy someone else's journey. They choose the vehicle that matches their own destination. It is so tempting to look at a flashy day trader on social media and think, yep, I need to do that. But if you have a full-time job and a busy family life, their vehicle is going to break down on your road. True success comes from traveling your own path with discipline and a rock-solid plan.
Let this be your golden rule from this day forward. The destination decides the vehicle. In trading, your goal decides your trading style. You have to figure out where you are going before you decide how you are going to get there. It sounds so simple, right? But skipping this step is exactly why so many beginners fail.
So, before you open up a single chart today or even think about placing your next trade, I need you to answer one deeply personal question. What exactly is your financial destination? Because until you know where you're going, you have no business choosing a vehicle. Thanks for hanging out with me for this explainer. Now get out there and map out your journey.